Hey guys, in today's video, we're going to look at how Bitcoin is repeating history, and this pump did not just come out of the blue. We're also going to look at some of the headlines from the past week between US, China, and the Fed. So let's jump into it. So we're just going to look at some of the headlines over the past week. It's been a lot of back and forth between the US, China, the Fed. Um, so, first up, earlier this week, Trump spoke and a reporter asked, are you having talks with China? That was literally the question. And Trump probably didn't lie in saying that, yes, we talk to China every day. The reporter didn't classify what you're chatting with China about. But with Trump's response saying that they're speaking every day, the reporters were able to then use that to, twist the headlines in their favor, help markets, obviously, at the time. But today, China have come out and said that they have not been having talks with the US on tariffs. So I don't think that's necessarily on Trump. I think the reporter could have done a better job there on asking the question. Another headline that just came out in the last 24 hours is Federal Reserve withdraws crypto activity reporting requirements for banks. So basically, you're getting some little headlines here, but they're not really catalysts. They obviously are taking some of the red tape off crypto, making it a little bit easier to navigate, which is good long term. And another headline that came out today was Apple plans to remove or produce their phones now in India and hope to have that fully in place by the end of 2026. Now, end of 2026 is quite a long way away, and it's likely that we're going to come to some kind of agreement with China in the next, 90 days. So I think this might be more of a backup plan for Apple. And, the headlines are there to obviously influence China to make a decision or get on the phone. But again, these headlines, they change every day. So, take everything with a pinch of salt. So one of the other headlines here that did come out is that it's unlikely that Trump is going to extend this pause on tariffs. I heard him mention that, if a deal hasn't been made with the country by the end of the 90 days, that he will basically just set his own tariff on the country, and then they can decide if they want to do business with the US. So, in that sense, it might be in most countries' best interest to try and come up with a deal before the 90 days, because if Trump was to stand to his word there, who knows what kind of tariff will get put on most countries. So that's basically it for the headlines for the week. Lots of back and forth. Last week, obviously, the last thing is the Fed. We discussed in the last video about Trump possibly trying to get rid of Jerome Powell. And then we started out this week with Trump has no intentions to get rid of him. So back and forth, flip flopping around. And, I feel like the markets are just exhausted with it. And we could kind of see that this week with even this China headline here that came out that China says it's not having any tariff talks with the US. Pretty much had zero impact on the open today. Open pretty green across the board. Tesla had a huge day. Cryptos continued to rally. We're at a little bit of consolidation now on Bitcoin, but one thing I wanted to look at is obviously the ETF inflow. I've got it over here. So a lot of people, when Bitcoin price is rallying and ETF inflows are climbing, a lot of people are getting bullish. A lot of influencers on here, they're also sharing how the inflows are hitting all-time highs, and this is huge, and we're going to keep climbing. But if you actually take a deeper dive, these huge inflows that we're seeing now in the past, they've been at tops, significant tops. So you can see, the last couple of days we've had great inflows. The last time we had these kind of numbers, Bitcoin was at 106, putting in a lower high, and it fell from that point. So that was the last time. The time before that, Bitcoin was at a high and it fell. It had two big inflow days and then fell. Time before that, you know, was the Trump inauguration rally, which was more sustainable. But even if we look back to the ETF, the time that Bitcoin hit 70, 74, 73 and a half K, that came right at the peak of the ETF inflow right here. So again, tick the peaks. And anybody telling you that this is bullish, I would say take that with a pinch of salt. I don't see that as a bullish indicator. If anything, the net outflows normally marks somewhere near a bottom of a correction. You know, even here, if we look, we had 2 days of massive inflows at 72K. Then we had a correction with an outflow day, and that outflow day marked the low. So look for the outflow days for lows and look for the inflow days as possible tops. So that's the Bitcoin ETF inflow and outflows. On the heat maps here, I've got marked off, significant where the liquidity lies, and in this red line here, I've marked out, we've got 2 levels here above where there's quite a lot of liquidity. This first one is around the 98K mark, and the next one above is then that psychological level, bang on basically 100,000. So these are the next 2 levels where the major liquidity lies. And beneath we have 85K. So bear in mind now we are going into the weekend, where we're prone to getting, fake moves to grab liquidity. So, the closest liquidity definitely sits above. So wouldn't be surprised if we did, attack 98K this weekend. And then next week we could have quite a severe pullback into the 80, 85K. They're my areas of interest. Just as we've been covering in the last couple of videos, the exchange volume, we, did mark that low that we talked about in the last video. And since then we did rally. We talked about the bull flag, the pennant that was forming, and that target being 93K. So we did get that 93K target, and the exchange volume has ticked up. There has been some buying happening, spot buying. But for us to see a sustainable rally, we really need this to tick up, continue ticking up. And we really are looking out for that higher high, which we haven't seen on this whole downtrend. Now, although Bitcoin price itself has broken out, this will be the determining factor whether we're going to see a sustained rally beyond what we've currently seen. So we are going to hop over onto the charts now. So I want to take a look at 2 charts today. The first being obviously Bitcoin, and then we're going to take a look at the dollar dominance chart. And we're going to look at the 2 combined together, how history has repeated itself and how you can kind of spot that in your own analysis in future. So looking at the current price action in Bitcoin here, you can see, we've had this double bottom. Last time I did a video, we were in this little pennant here. And since then, we have broken out. We've actually pushed up above 95, but at the time of filming this, we are sitting around the 94.6 mark. But what I want to go through is basically the correction we've just had. A lot of people got very bearish throughout this correction. And, I understand why, especially in the altcoin market, it really did get demolished. Suffered a lot more than Bitcoin. Bitcoin actually held up really well. Um, but this high right here, this first high in Bitcoin, that for most alts marked the high. And when Bitcoin went through its first kind of corrective move here, those alts all corrected. Bitcoin had a second attempt at the high where it just swept above, but the alts, many alts did not come back up for that. So, if we look at the corrective move as starting around here, it lasted 111 days. Now, if you take it off the all-time high, 77 days. But if we are looking at this in comparison to the total market cap chart, the real high was in around December, and we're looking at a 111-day corrective move. Now, looking at just what's happening currently, Bitcoin has now reclaimed this 50% level, which is huge, and it's also the level that when Bitcoin was trading above 100K here, this was the level that was holding price up. Basically, if I draw a horizontal line on my chart here, this kind of close here was the lowest close we had until we broke. And now we are trading back above that yellow line on the 50% level. So we've had, we're on our fourth consecutive daily close above, which shows great strength. Whether this holds as support is yet to be seen, but things are looking good. Personally, we might get a move up to the 98K level and then a retrace down into the 88. But hopefully, if the market's going to continue higher, these levels here will act as good support in around that 89 to 88K is where I would like to see Bitcoin catch some support. But back to Bitcoin repeating history. The reason I've got this corrective move marked out the days at 111, and the corrective move in price is a 31% move, which is actually probably one of the biggest price moves Bitcoin's ever had in terms of a correction. It's gone all the way from 109 down to almost 74K. So now when we zoom out and we look at previous cycles, the thing that I want to point out is basically every time Bitcoin has put in its cycle top, which in the first cycle was here, and then it's gone into the bear market. When it's come out of its bear market and taken out the high, it's had a nice strong rally beyond that point to eventually then find itself having to go through quite a major correction. So in this first cycle, you're looking at, to the real low, 81%, but the corrective move lasted 85 days. So that first correction after breaking through the all-time high, 85-day correction, and following that low, Bitcoin rallied for 148 days to new all-time highs. And then that was the final mark of the bull run. And then we started a new bear market. As we went into the bear market, rallied out again, next cycle, once we got the strong close above the previous all-time high, Bitcoin continued to rally up, had a nice strong move, and then eventually we had our pullback. In that cycle, it was a 39, almost 40% pullback, lasting 41 days, and then, which isn't very long, and then we had a continuation on, which was a very strong bull run, and that continuation lasted 150 days. So there's only 2 days of difference. Basically, once that key low was put in, we had 148 days and 150 days of a rally to take us to the top of the bull market. Same thing happened again, bear market low. Once we cleared the all-time high, Bitcoin had a nice strong rally. In that case, it was all up to high 60s. And then we pulled back quite aggressively, 54% pullback. This was last cycle. And that pullback lasted 96 days. And following that, we actually got a double bottom on that one. So double bottom, and then we had, 111 days. If you take it from the very low around here, you're looking at 141 days, basically, from the low to the high, 141 days. So again, very similar to the previous cycles. And now, Bitcoin here, this yellow dotted line is the previous all-time high. When we got a clear aggressive move out, we got a nice push higher, and that marked our high at 109. And then we've had this corrective move down to 74, lasting longer than the previous cycle, any of the previous cycles. 111 days. That's off the first high. Again, we take it off the second, the real true high, we're looking at 77 days. So correlates quite well with previous cycles. Now, if we were to extend the move from the low out now to 147, roughly on average, that's what it's been, 147 days, that would take us out to September 2025. I think it's very possible that we do now rally pretty well. We'll definitely have pullbacks along the way. Maybe June, July, we have a little pullback. But I could see us rallying pretty strong into September before we see any real strong pullback like we just seen. So that's just something I wanted to cover there. Looking back at history when you're doing your macro analysis. And then to tie all this together, we can also look at the dollar dominance to get some more confluence. So, when I'm looking at the dominance charts, I've started to add the Tether chart, the USDT chart plus the USDC chart together to get just more data collected in so we get a better reading. And this dates back to 2019. So really all we've got here is last cycle. But we've drawn a trend line off these lows, key lows. And basically anytime the dollar dominance has come down to make contact with this trend line, it's basically marked a top on the total chart or the Bitcoin chart. So this marked a high on the total, and then money left Bitcoin and altcoins, went back into stable coins, and basically rallied all the way up to here. Again, when we came down, this was last cycle, and we spent some time here at the trend line. This was when Bitcoin was at its first high. And then we had that one that we just covered, the 50% pullback on Bitcoin was this move where money just went back into stablecoin. And then the next time Bitcoin rallied to the high, basically it was an SFP last cycle. Bitcoin didn't actually come back down to the trend line. But looking at the key time frames here, basically the big move last cycle was this move for Bitcoin. Basically, September 2020 out to February 2021. You could even say, April 2021. So this move where dollar dominance marked an actual low from the high to the low was 151 days. And then when we got the low, it took 121 days for dollar dominance to go from its low to its first high here. 121 days. And the reason I've got this box around this area is because this is very similar to where we were, or where we've been basically here. So, if I pull this box over here, in this cycle, we came down to the trend line, we deviated underneath, put in a bit of a double bottom, and then the corrective move in Bitcoin was fueled here from this move. So very similar. And if we look at the time from the low on dollar dominance to dollar dominance finding a high, we look at this low right here, which again was in December. This is when alts started to tumble. Started December. The high was April 6th, so earlier this month, 122 days. So just 1 day of a difference from that cycle to this cycle. Following that, last cycle, we got a bit of a double top, but basically you got from that first, the high here, you got 141 days of rally where basically dollar dominance was falling in a downtrend. And that 141 days marked basically the end of the bull market. And then we went into the bear market. So, if something similar was to happen here, you'd be looking 141 days. We said 147. But basically, August, end of August, 147 would take you out to September. So this chart, it's all in the charts. This one marked out is basically where Bitcoin, this was the August low. So the Bank of Japan carry trade where tons of money flowed into stable coins and the altcoin market caps basically got crashed. And then that time it took for the recovery was 122 days. So this cycle, the recoveries have actually been a lot faster. From August to December, obviously a lot of that was fueled by Trump getting in. So looking ahead, some areas to point out on this chart that I think you should keep an eye on are basically the concerning thing here on this chart is the fact that, since the bear market, we've been in a downtrend, putting in these lower highs, lower lows, lower high, lower low, lower high, lower low. This did mark a higher high, but it was just a bit of a deviation, equal high. We did get a lower low. But since then, this recent pullback across the board has resulted in a bit of a breakout here on the dollar dominance chart. So now we're on the, looking at the dominance chart, we're on the strong side of the trend line. So we've had a breakout. And you could assume that perhaps dollar dominance will come back down, test this trend line, and catch a bounce. So if that was to happen, it would obviously result in things rally until we get that bounce. And the areas that I'm looking at are basically got this yellow line marked, just been previous support here and been acted as resistance support. So this would be my first area where we could see a possible strong bounce on the dollar dominance, and that's at 17%. So 6%. And then you can see here what I've done, taken this double bottom, created a trend line off the double bottom. I'll get rid of this box to make that a little easier to see. Got this double bottom, and then we've also zoomed out. We've got this macro trend line, which we've deviated once under here. So we've got the macro trend line, we've got this new trend line, and then we've got the descending trend line, which has basically been the whole bull run. And this is a huge area of interest. I want to see how dollar dominance reacts if, we were to, bounce and start putting in higher lows and higher highs again. It wouldn't look great for Bitcoin and alts. But on the other hand, if this was to break down, get an underside retest and crash, basically sending your alts to Valhalla, really, you're going to be printing at that point. And I think either of these is possible. I think as a trader, you need to be prepared for both. think that's why just having these marked out, doing some macro analysis, looking back at the past of, what's happened every time we've visited this trend line, you know, mark the date out on this and then go back to the Bitcoin chart and look at what Bitcoin was doing. And you're going to be able to come up with your own kind of thesis on the macro picture. Um, but yeah, if we can get back under this macro trend line and actually get, some weekly, monthly closes under, I think you could have quite a right translated cycle. Um, but if we get the bounce here, it's probably going to be the left translated cycle that a lot of people have talked about. We obviously, the 4 year cycle has been a thing basically since the start of Bitcoin. Um, and we'll talk about this in future videos about the 18-year real estate cycle. Um, there's a good guy I watch on YouTube, Jason Pizzino. He talks about this in detail. It's worth checking out his channel. But um, basically, the 18-year cycle, if you look back, 2008 was the last major crash. And during the 18-year cycle, you get many pullbacks, many recessions, COVID and different things. And basically, we're coming near the end. 2026 would be the end. And Bitcoin was created out of the financial crash, so in 2009. So it's never really faced a major recession. So it's very unknown how Bitcoin will react. It is great to see that perhaps it's starting to decouple from the stock market. I'm not sure how much weight there is behind that at the current, time. But eventually, in a major recession, especially if it's a financial recession, then we may see Bitcoin continue to rally or hold, which would be great. But I don't think that the 4 year cycle is going to be reliable going into the future. I do think we're going to start to move away from that. Um, just because, as well, a lot of the times the 4 year cycle has been created because of the halving event. The cost of mining Bitcoin has had a correlation to the 4 year cycle. Whereas now we're getting down into smaller amounts of Bitcoin being able to be mined, and a lot more of the Bitcoin is actually in circulation. That is going to make the 4 year cycle weaker. It's not going to have the same strength that it once had. So that's just something to be wary of. Um, but that's pretty much everything I wanted to cover today. If you did enjoy this video, please like, subscribe, and comment down below. It really helps the channel out. And I'll see you in my next video.